Could this penny stock be one of the best investments you could make going into 2021? What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about Orbital Energy Group, ticker symbol OEG. They are a Nasdaq listed company. They are $1.48 a share right now, and they have a tiny market cap of 45 million. Now I know everybody gets so excited about penny stocks because if you pick the right one, it's easy to 2, 5, 10, even 100x your money. The fact of the matter is most penny stocks don't do that though, my friends. So I want to make sure that you're all aware of that. When looking into any penny stock, make sure you understand the risks and understand that not everything is going to shoot up 500% in the matter of a year. What's also difficult about penny stocks is oftentimes people only find out about them once an absolutely insane run-up has happened. It's hard to find a stock that trades undervalued and has upcoming catalysts and is, a sub $50 million market cap company. But in today's video, I believe we may have found one of those hidden gems. So again, for full transparency, I am not yet invested in this company, so I'm not trying to pump it. In fact, if it goes up because of this video and I don't have a position built, it's going to be bad for me. But I do just want to make that clear. I don't directly or indirectly own a position in this company as of uploading this video. So today we're going to speak about it. We're going to speak about the recent price action because it has gone on quite a nice run up. It's had its ups and downs. We're going to speak about this Seeking Alpha article. We're going to speak about their recent third quarter earnings, okay? We're also going to go through their recent investor presentation that only came out in November. And after those things, we're going to look at a few things from the earnings call, a few things that the CEO spoke about that could genuinely lead us to believe that revenue is going to 4 to 6 times next year, my friends. And last but not least, we're also going to have a look at some analyst coverage and analyst price targets. So my friends, right before we do get into the video, can I please ask you to hit that juicy like button for a hidden gem? You guys usually love these penny stock videos. Drop me a comment down below, let me know what you think about this company. And also let me know what your favorite penny stock is right now. I'm interested in hearing from you guys going into next year. And please, my friend, if you aren't even new around here, hit that juicy red subscribe button. We recently broke 65,000. We're on the road to 70, baby. Also, if you're interested in joining my private Discord group, that's the first link in the description. In there you get my buy and sell alerts. You get access to over 40 private channels. There is a lot coming to it in January, and I recommend waiting until January to sign up because Patreon charges the first of every month, so wait till then, but understand it's going to be incredible. And if you want 4 free stocks on Webull, hit the second link in the description, my friends. Make an account, deposit $100. It's that simple. You get free money. 2 of those can be valued up to $3,700, the easiest money you'll make in your life. Now, with all that being said, this is where I want to start it off, a Seeking Alpha article, and it's titled Undiscovered Renewable Energy Company. Now, this came out only a couple of days ago as well, December 24th. So throughout 2020, this company has been transformed into a renewable energy infrastructure company. If I bring you to the website, you're going to see Orbital Gas, but now what you're really going to see is Orbital Power, and what is most important, Orbital Solar. And you will see that when we get into the Q3 earnings call, solar is incredibly, and I mean incredibly important, and is what makes this company exciting going into next year in particular. And then existing utility infrastructure is either at or past its useful life. Coal power is being phased out and converted to clean energy. OEG transformed itself to compete in this industry, so they're completely changing. And when I say completely, I mean completely. Solar and renewable gas projects will be significant revenue drivers for OEG, and investors are starting to take notice of this. So they've repositioned themselves to capitalize on the secular trend of fixing and replacing utility infrastructure. Very fair. Utility infrastructure such as the transmission and distribution equipment are currently at or past useful life. Aging power lines are causing fires, power outages, and are also inefficient for the utility. The movement of reducing carbon and emissions has utilities expanding into the alternative power sources of solar farms and renewable gas. So in under a year, they transformed into a stock to watch as it competes in the energy infrastructure market. And here's how they have transformed themselves over the last year or so. So Q3 2019, they sold electromechanical operations. Fast forward to Q4, okay? Jim O'Neill, we're going to speak a lot about him in today's video. Seasoned industry executive named OEG Vice Chairman and CEO. So a new CEO's taken on. They sold the domestic power operations. And that's where things get exciting. Q1 2020 launched the Orbital Power Services, providing electric transmission and distribution services. And Q2 2020 acquired the Reach Construction Group, a minority-owned premier provider of engineering, procurement, and construction services to utility-scale solar customers. And they completed the name change to Orbital Energy Group. So the major transformation began Q4 when they sold their main division for $50 million. And so after that, Mr. O'Neill, the new CEO, began building the company from the ground up. It's essentially a different company. Besides the legacy natural gas division, the company is entirely newly formed under his direction. And he has already done so much for the company. In Q1, Orbital Power Services was organically developed. This division of the company was formed to work with utilities utilities to provide electric transmission and distribution services. Since inception, it already has signed 3 master service agreements with investor-owned utilities, and these service contracts provide a reliable, recurring, monthly revenue cash flow stream going into next year. That is exactly what we want to see from this company. Now, integration and startup costs, according to the CEO, are largely behind the company, okay? So the cash used in operations has been decreasing throughout the year, from 7.7 million in Q1, 1.3 million in Q2, down to 950,000 in Q3. And during the recent Q3 earnings call, okay, he stated he believes the company is on track to be EBITDA and cash flow positive going into 2021. Now that is a very important statement, because right now I'm showing you the summary financial highlights from their Q3 report, okay? Now you can see our revenues have gone up absolutely massively. Our gross profit also has gone up absolutely massively from, Q3 2020 through Q3 2019. The balance sheet, however, we only have cash and cash equivalents of $4.1 million. And they were working at an operating loss of $6.3 million for the 3 months ended September 30th. So this is the first major red flag I see with this company, the cash position that we are in. So the CEO telling us that we're going to be EBITDA and cash flow positive going into 2021 is extraordinarily important. The question is, can they actually do it realistically? Now you will see the total backlog went up to $52 million from $46.4 million from the second quarter to the third quarter. So they are getting in orders. I want you guys to think about that number, okay? There's a $52 million backlog and we have a $45 million market cap right now. But now here is where things begin to get extraordinarily exciting, my friends. An analyst, Craig Callum, one of the analysts who's covering this company, asked company management for colour on Q4 revenue guidance and what revenue step up they expected for 2021. And this is one of the biggest questions, probably the single biggest question I have for the company as well. Jim O'Neill expects solar revenue to be better than Q3 and expects a major revenue step up for 2021. He says, at some point, this is going to ramp significantly, in my opinion, to where we're going to be moving in order of magnitude from 30 million to 60 million a quarter. I mean, this is a revenue store for us. That's what's going to take us to profitability, to execute profitably in the infrastructure segment of the solar and electric power infrastructure segment. Both have significant growth trajectories that we're going to experience here as we move into next year. I mean, guys, that's immense. 30 to 60 million a quarter for a company with this market cap. Even on the lower end, that represents hundreds of percents of growth next year alone. On the higher end, we could be looking at a 5 to 6x in a year company right now at current prices. Now the thing is, the CEO again has stated he plans to grow through acquisitions, but they only have $4 million of cash on the balance sheet. So it said here they're going to have to raise funding. They filed a $50 million shelf registration in July 2020. So that's the preliminary paperwork to register securities for sale at a later date. So it's essentially concerned that some absolutely immense share dilution is going to happen. Now on the Q3 call, the CFO said they do not have immediate plans to access the market. He says, I believe a secondary is inevitable to execute on their growth strategy and to shore up their balance sheet. However, I do believe a secondary offering will only have a short-term negative effect and might even be taken as a positive. So here's how I feel about this. I've said so many times on this channel, I don't mind secondary offerings. I don't mind share dilutions if they're done for the right reason, okay? Obviously, we're looking at a company with a $45 million market cap. They have a shelf offering of $50 million. That is a disgusting, and I mean truly disgusting amount of share dilution. Unless they wait a long time, okay? And this company goes up to anywhere in the realms of $5 to $7 a share, that would be an immense amount to dilute. But if it allows them to go through these acquisitions that Jim O'Neill, the CEO, is speaking about, and if ultimately it puts the company in a better position pretty much immediately, and it improves the long-term fundamentals of the company, it's still a good thing. More often than not, share dilution does lead to a short-term downward movement in the company. But look at any of the best performing companies in the world. I guarantee you they have diluted their share pool on several occasions. It is a part of investing in the market, my friends. And it's going to be even bigger part of investing in small cap companies or penny stocks. So my two primary concerns about this company somewhat cancel each other out. We only have $4 million on the balance sheet, but we have a $50 million shelf offering. Now that does not mean they're going to have to dilute the share to the extent of $50 million in one go. It could be smaller. They could do a quarterly potential just to keep the balance sheet looking okay, just to keep them working their operations until we do turn cash flow positive. But they definitely are two things you need to be aware of right now. Now, a few points from the investor presentation. We kind of covered a lot of it through speaking there, but I want to speak about their forward vision. To drive organic growth. Makes a lot of sense. It's what we want to see. Organic growth is the best growth. Leverage synergies with Reed's Construction Group to broaden infrastructure service offerings. Okay, awesome. Complete new targeted acquisitions. That was we just spoke about, okay? And this is going to be very important again for this company. I mean, choosing the right acquisitions is going to be very important. But this ultimately is going to lead to share dilution at some stage as well, my friends. Environmental initiative. So increase the utility scale solar program, and I think this again could be one of the most important things, full stop. Leverage the biomethane and mercury measurement technology and expertise and help customers address ESG concerns and their social responsibility. Now, they're targeted acquisitions, okay? So evaluating different types of acquisitions. So first of all, we have platforms, okay? Electric power, renewable and natural gas, and solar. Then there is what they refer to as tuck-in acquisitions. So this will be rapidly build scale, increase geographic footprint, and expand existing capabilities. And the criteria, so they need to see positive EBITDA and margins that are better than the industry average. Revenue visibility, good outlook for growth, entrepreneurial leaders and founders, deep customer relationships, a strong backlog, growth constrained by their balance sheet, and ESG as a core value. Perfect. Absolutely perfect. One more thing I want to speak about in regards to cash position, okay? So the net loss for the quarter was $3.2 million. Now that was compared to a net loss of $9.3 for the second quarter of 2020 and a net loss of $312,000 for the third quarter of 2019. They had higher SG&A expenses compared to the same period last year, primarily due to the addition of overhead costs associated with supporting both REIT construction and orbital power service operations, which commenced this year. However, our sequential improvement for the quarter reflects our revenues are increasing and our electric power and solar infrastructure segment. And that's the majority of startup costs and integration expenses we incurred for this group in the first half of 2020 are largely behind us. So we could potentially expect that $4 million that we have to go a little bit further than it would have this year, as again a lot of it went into SG&A and a lot of it was building the groundwork. But guys, this is one of the key phrases that got me really excited. At some point this is going to ramp significantly to where we're going to be moving in order of magnitude from 30 million to 60 million a quarter in revenue. That's solar, my friends. And in regards to being EBITDA and cash flow positive, again, Jim O'Neill, CEO, says we expect to be there in the first quarter of next year, early in 2021. So obviously we still have to find out about their Q4 earnings, and we won't be doing so for another 3 months or so. And that's not necessarily where they expect to be cash flow positive and EBITDA positive, but the first quarter of 2021 is. They do also say that will be dependent upon the growth in the electric power and solar infrastructure segment. Now there are 3 analysts currently covering this stock, okay, with a low and median forecast of $2 a share, which only represents 35% upside, and a high of $2.50 a share. Now what I want to say is I went ahead and I did some research. I didn't see any of these get changed since their Q3 earnings have came out. We got a lot of juicy information. So these all were pre-Q3 earnings. So we now have a bigger backlog. We know we expect to be cash flow and EBITDA positive by the first quarter of 2021. It wouldn't surprise me at all if the 3 analysts covering this company would come out and adjust their price targets, or if a few more analysts start covering them relatively soon as well. But of course, only time's going to tell us that one. And guys, worth knowing as well, they only regained compliance with the minimum bid price requirement for continued listing on the Nasdaq back on the 9th of December. So they went 11 consecutive business days from November 20th to December 7th. The closing bid price has been above $1 a share or greater. So if there is to be a considerable pullback, these guys may no longer be on the Nasdaq. They may go back to OTC, so do be aware of that, my friends. And when we do have a bit more of a look at the stock chart, okay, they had a run up all the way to about $2.24 a share. That was the absolute peak. We came down and consolidated somewhere between, let's say, 110 and 140 or so. Now we're sitting right about 148. So do I think this is a good price point? Well, ultimately, if next year goes to plan, 100% yes, but I expect a whole lot of short-term volatility. Less than 2 weeks ago, this company did literally bounce off that $1 a share point, okay? This is not a penny stock who is past the stage of big swings, in my opinion. We don't have an extraordinarily clear direction. There has been consolidation. There's been lots of ups and downs over the last couple of weeks. It's a penny stock. Penny stocks carry a lot of risks. Ultimately, I think if next year goes to plan for this company, buying at this price is going to be absolutely fantastic. But if it doesn't go to plan, I think it's going to be terrible. And that usually is the case with penny stocks, my friends. The good thing about these guys is I don't think hype has taken them over yet. I don't think a lot of people really know about them. What I will say, if hype does take over here, I'd be quite cautious in regards to buying. But if we're looking at 150 with a $45 million market cap, I see no reason why this cannot be a 5x stock next year if management executes, if they get good acquisitions, and if they can fill that backlog. But anyway guys, that was a video on Orbital Energy Group. I hope you guys did enjoy. At least you got to hear about something a little bit different today. If you did enjoy, maybe took some value, some entertainment, could I please ask you, hit that juicy like button, drop me a comment down below. I'm interested. Are you interested in this company? And please do subscribe if you're new around here. here, my friend. All of that would help me out so much. Again, that private Discord is the first link in the description, but wait until the 1st of January. And if you want those 4 free stocks on Webull, that's the second link, and that's the easiest money you'll make in your life. And I would just like to say again, guys, thank you so much for all of the support this year. You guys have completely changed my lives, and I'm looking forward to hopefully, you know, playing a role in your 2021. But anyway, my friends, I hope you all have an absolutely beautiful day. I'll see you for another video very soon. Peace.